What's going on, everybody? Welcome back to the channel. I want to remind everyone that in this investing channel, I'm here to help all of you grow to be financially fit on your own. I'm never going to ask you to sign up for classes or some bullshit courses that are going to cost you hundreds of dollars. I'm going to give you the information you need in order to value equities and ETFs and your 401k so you could benefit in the long term for your family. All right. In today's episode, guys, I want to discuss Anthony Noto's latest interview on CNBC. He went on there yesterday talking about the Morgan Stanley downgrade, valuing them as a bank. So we're going to go through the interview together. We're going to watch some of it. I'm going to give you my opinion on it. And in the comments below, I want you guys to give your opinion on Sofi, what's going on with their current products. And do you guys value them as a bank or more as a tech company? I kind of value them as both, which gives us the benefits of all these big banks plus the ability to go into the future with all the great technology that's moving our society forward. All right, here we go.
Anthony, thanks for joining us here in Sun Valley. I want to start off the conversation. We have so much to talk about, but start off the conversation on that Morgan Stanley note saying that SoFi should be valued as a bank, not as a tech company or a fintech. What's your response to that analyst downgrade?
My response would be we're a diversified financial company that delivers our value proposition via technology. And so analysts can value us any way that they would like, if they want to value us like a technology company or as a bank. If you look at us as a bank, we're a bank that's structuring our business over the long term at steady state to have a 30% ROE. Banks that have a 30% ROE trade at 4 to 5 times tangible book. We're trading below that today. So that's my point of view if you want to value us as banks.
Okay. Well, I want to talk a little bit about some of the news from this week about inflation. We had the consumer price index and PPI.
Before we get into the inflation report that came out this week, was okay. It wasn't as great as I think some people want it to be, because when you're comparing inflation year over year, last June, if you look at it, I think it was 11% year over year. It's one of the worst year over year comparison we've had in inflation in decades. So to compare year over year doesn't really give us what is really happening in today's marketplace with inflation. But it was 0.1% in May and then ticked up a little bit to 0.2% in June. If we can stay under 0.3%, I think that's a good thing moving forward, because every month, say if it's 0.2%, you times that by 12, and then we're at like around 2.5% core inflation over the year. But I want to talk about how SoFi is, how their valuation is constructed, right? Do we value them as a bank? Because most banks, I mean, they're lucky to trade at like a 10 PE, but their growth is nowhere near what SoFi's is, right? SoFi is growing 20, 30% year over year, and these big banks, their margins are slim, and they're just not growing the way SoFi is. So let's hear Anthony Noto talk about the recent inflation data.
Is showing slowing inflation. What does that mean for your business at SoFi?
A strong economy is great for our business. We've had a strong economy. It's allowed us to really operate in different environments over the last 2 years. We haven't had the student loan business be as robust as it can be in 2024. But over the last 2 years, we've had 8 record quarters in a row of record revenue. With rates going up, I think is in a period of stability where rates are flat, we can operate incredibly well, and we've done really well while they're going up. So
I want to talk a little bit about the student loan business. Of course, SoFi started out in the student loan business, and there have been a couple of big news items that have been very relevant to that. Most recently, the Supreme Court ruling that was rejecting student loan forgiveness. Also, the news around the debt ceiling. What does that mean for your business going forward?
The most important thing for our country is there's clarity. Now people can decide what they want to do. They have to resume their federal student loan payments. We give them a great option to lower their cost of that payment by refinancing with us if they can get a lower rate, or lowering the payment by extending it out over time, which in this environment where they haven't paid that student loan for 3 years, they may have other costs that don't allow them to make that payment again, so they can spread it out over a longer time and lower the monthly payment. That will be a contributor to our business. It's been a real negative the last 3 years. But as I mentioned, I couldn't be proud of our team in hitting 8 quarters of record revenue in a row. But the fact that there's clarity is most important.
The fact that SoFi was able to have 8 consecutive record-setting revenue is remarkable, considering the student loan business has been stagnant for the last 3 years. So over the next, I don't know, 2 to 3 years, we're going to see a lot of these people, like he said, refinancing these loans, extending them out over a greater period of time, but they're going to be able to have a smaller monthly payment to make the payment each month. And hopefully SoFi gives them a reasonable rate, because I'm a proponent of, especially for school, we need to have fixed rates. We can't have these variable rates for students. I think that's super predatory and not fair. If we want to invest in the people getting these student loans, right? So I think these student loan companies need to take a little bit less on the student loan aspect and, maybe tick it up for personal loans for people who have established wealth, right? Okay, here we go.
Do you think the administration has to find ways to give relief for those people that need it? And we're in the right economy to do that now, where before we had to give relief to everybody.
John Ford has some questions here. John?
Yeah, thanks, Julia. Anthony, you just gave us the case if the street wants to value you like a bank. Give me your point of view if investors are going to treat you like a technology company, focusing maybe on your margins, AI, how you're going to grow users, and your ability to expand into new markets.
So, John, our business doesn't exist without technology. We have no buildings, we have no branches. It's you access our product via the mobile phone or your PC. So we're absolutely a technology company. We have our own technology platform, which is also part of our business that contributes 20+% of our revenue. And we're using our technology to power other fintechs and B2B companies. Our growth has been over 40% in the Q1. We had really strong member growth. As I mentioned, record revenue and record EBITDA. We're seeing great trends in our business on the back of our strategy to be a one-stop shop for all your financial needs. We're the only company that provides for you on one digital platform all the financial needs or products that you need as a consumer, and we do with a superior value proposition. And that's allowing us to gain huge market share. We've added over $2 billion of deposits every quarter since we got our bank license, and we continue to see that trend very positively.
SoFi getting that bank charter is huge for their business. And everything that Anthony Noto just went over is like their ability to be the only real platform where you can do everything on that app. You can get home insurance, you can get all kinds of different mortgages, you can access they just completely redid their investing platform, which I love, by the way. Doing all this in one app and then not having to all this overhead for all these commercial buildings and stuff is going to make their margins even better going forward. I hope you guys enjoyed this video. Let me know in the comments below your thoughts on SoFi, their platform, what they can do to improve going forward, and do you think should be valued as a bank, or should they be valued as a tech company, or maybe a little bit of both? I think SoFi is a unicorn in this aspect, where they have the bank aspect and the tech aspect, and that's going to help them grow forward. And I think my 1 year price target for SoFi, $15. All right, guys, thanks so much for tuning in, and we'll catch you guys on the next video. Peace.